You know all that financial news, the expert opinions, the super complicated earnings reports? What if I told you it's pretty much all just noise? That there's a simple, visual pattern that shows up again and again and again in every stock, in every market? Well, there is. And today, we're going to pull back the curtain on a secret the pros have been using for decades.
Yeah, we've all heard it, right? Buy low, sell high. It's like the first thing anyone ever tells you about investing. But according to the legendary trader Stan Weinstein, that advice isn't just wrong, it's dangerous. It's a cliche that actually blinds people to how the market really works. And honestly, it's time we just tossed it out for good.
Okay, so if buy low, sell high is a total trap, you gotta wonder, what other bad advice are we following? Turns out, a lot of the things we're told we should be doing aren't just a waste of time, they can actually wreck your portfolio.
Think about it. Reading all the financial papers, being glued to the TV business report, jumping on breaking news. Why is this a losing strategy? Well, it's because the market is always looking ahead. That means by the time you read about some great news, the big money, the smart money, they already acted on it. The good news is already priced in. You're late to the party. Every single time.
Okay, now check this out. This slide is just incredible. On the left, you've got real headlines from late 1974. I mean, world depression, jobless rate highest since 41, total panic in the streets, right? But now, look at the chart on the right. At that exact same time, when everyone was freaking out, the Dow Jones hit rock bottom and then boom, kicked off one of the greatest bull markets ever. The news was telling you the world was ending, but the chart was practically screaming, buy!
So, if the headlines are always looking in the rearview mirror, where do we find the real truth? Well, it's actually pretty simple, and it's been staring us in the face this whole time. You've got to learn to listen to the chart. This right here, this is the core idea. A stock chart, or what old school traders called the tape, it's not just some random line wiggling on a screen. It's everything. It's the combined hopes and fears and buy and sell decisions of millions of people, all boiled down into one picture. I love how the source material puts it. It's like a cardiogram of the market's health. It shows you what's really happening, not the story someone wants to tell you.
And this is the secret map. Seriously, every single stock, I don't care if it's some hot new tech company or a boring old industrial firm, goes through this exact life cycle. It's a pattern. There are 4 distinct stages, and figuring out which stage a stock is in right now, well, that's the whole ballgame.
Okay, so before we dive into that map, we need one simple tool. Just one. It's called the 30-week moving average. And don't worry, it sounds way more complicated than it is. All it is a smoothed out line showing the stock's average price over the last 30 weeks. That's it. It just tells us the long-term trend. Is it going up, down, or just kind of flat? This one line is going to be our compass.
All right, let's get to the good stuff. The absolute best way to understand these 4 stages is with a really simple analogy, the 4 seasons. Every stock has a winter, a spring, a summer, and an autumn. It's that predictable.
So the cycle goes like this. We have stage 1, the basing area, that's our winter. Then stage 2, the advancing phase, that's spring. Stage 3 is the top area, which is summer. And finally, stage 4, the declining phase, or autumn. Let's break them down, starting with that cold, boring winter.
So, stage 1 is winter. The stock has been beaten down and it finally stops falling. Honestly, it's boring. The price just bounces around sideways, going nowhere. Our compass, that 30-week moving average, goes totally flat. You've got buyers and sellers in a complete standoff. The stock is basically hibernating, just building up energy for whatever comes next.
And then it happens. Stage 2, spring. This is the moment we've been waiting for. The breakout. The stock just explodes out of that boring winter base, and you'll almost always see a huge spike in trading volume. Our moving average starts to point up. Now listen up, because this is critical. This is when you buy. This is the sweet spot. This is where the magic happens.
Okay, so after that amazing run-up, we hit stage 3, summer. The party starts to wind down. The momentum is fading. The stock's price gets really volatile and choppy, and it starts trading sideways again, kind of like it did back in winter. But make no mistake, this is totally different. This is a huge warning sign. The news headlines are probably glowing, but the chart is telling you it's getting tired. This is when the pros are quietly cashing out, selling their shares to all the amateur investors who are just now showing up.
And that brings us to the season you absolutely have to avoid. Stage 4, autumn. The floor gives out.
The stock crashes below that summer support level. You'll see our 30-week moving average roll over and point straight down. Seriously, this is when you want to be nowhere near this stock. This is where people who buy the dip get destroyed. They think they're getting a deal, but what they're really doing is catching a falling knife.
All right, we've gone through all 4 seasons of a stock's life. But if you remember literally just one thing from all of this, let it be what's coming next. This is the golden rule that ties it all together.
So, after all that, the myths, the charts, the seasons, what's the one thing you really, really need to remember?
It all boils down to this. It is this simple. You buy in stage 2. That's it. You only want to be involved when the stock is in that beautiful spring advance, and you avoid stage 4 like the plague. If you own something that slips into autumn, you get out. That's the entire game right there.
So now I want you to think about your own portfolio. Go on, pull up a chart for one of your stocks, put a 30-week moving average on it, and just ask yourself, what season is this in? Is it in a powerful spring just getting started? Or is a long cold winter coming? Because I guarantee you the chart already knows the answer.